It is quite likely that the equity market, the US equity market, is going to give us much lower returns for the next 10 years, maybe 3 to 5% on average, than we've experienced for the past 10 years. It's going to cause a lot of problems for a lot of people, and the reasons why we're seeing much lower returns going forward, we're going to cover in another video shortly. There are a lot of opportunities that we see of pockets of equities that could still see meaningful upside through the next 3 to 6 months, and I want to highlight some of those areas right now. Before we go into that though, real quick, I wanted to highlight the Wealth 365 event one more time. This is the world's largest and, quite frankly, in my opinion, the best online traders and investors expo. You get exposure to a lot of new strategies for free, a lot of free tools. You get a lot of freebies as well. It's a fantastic event. As always, I'm speaking there as well. We're going to talk about an option strategy we use. Certainly would love to have you there as well. But I really mean that it's a great event, and the point of it is to really give you ideas of what's possible and make you understand what kind of trading and investing you like to do, because everyone likes to do different things. So as I always say, I watch a lot of these presentations as well. I really do, and I always learn something. So by all means, join it. It's completely free. You're going to get a bunch of free stuff as well. You can sign up down below at the link, or if you're getting this by email, it'll be in the email as well. So having said that, I want to go through a couple of parts of the equity market that we think, and this is both through the lens of top-down economic analysis, but also from a charting perspective, so you can get your head around, you can see how it would make sense. So if and when we see the economies reopen a bit more, even though we're certainly seeing a lot of slowing and everything, we're probably going to see a rotation out of what we call the stay-at-home or the corona stocks. And with that, the alternative, or the other way of looking at it, is that you'll see rotation into real economy stocks. So one part of the market that we will like going forward, it's not to say you have to buy these stocks right here, right now, but at some point going forward, once we see the economies open up a bit more, something like the transportation ETF. Look at this, the IYT. This is a longer-term chart. You can see for the most part, this index hasn't really done a heck of a lot since December 2017. In fact, it hasn't done anything since then. And you can draw these lines in many different ways, but we do think the transports could ultimately break higher, potentially meaningfully so, through the lens of maybe the next 6 months or so. We have to probably get past the election to get a bit more clarity on some of those things, and of course past, at least to the point where we see some light at the end of the tunnel of COVID. Another part of the market that we like to really look at is the materials sector. And the materials sector is a very diversified part of the market. The ETF for this is XLB. And part of this is the chemicals companies, part of this is gold mining stocks. So it's very diversified. But if you look at this same story, basically since early 2018, this sector hasn't done anything, and is just now, over the past few months, past few weeks really at this point, started to break out. We would expect maybe some sort of a pullback at some point this autumn, but ultimately a resumption of this breakout that's really quite impressive. One more thing, actually two more I want to show you. One of them is an index, and this is the Nikkei 225 in Japan. Wanted to give you a really big picture outlook on this one here, just so you can kind of get your head around this, what the long-term monthly outlook looks like. You can see a real sort of basing pattern through the lens of the past 20 years. So this is a really big chart. But I wouldn't be surprised if at some point we see a resumption here to the upside. Again, this is certainly a more than a 6-month view, but I wanted to show you this one as well. And lastly, and this is probably one that's closest to me in terms of what's actionable right here, right now, is a stock like Caterpillar. And Caterpillar, if you don't know, is an industrial stock. So before we talked about transportation stocks and materials, and here too, if we were to see a reopening of the economy, things start to happen again, I would imagine that a stock like a company like Caterpillar could resume to the upside in a more meaningful fashion. And so those are a couple of the opportunities that we are seeing right now. Again, please do sign up for Wealth 365. A wonderful event. You won't regret it. I look forward to seeing you guys there. And with that, have a great trading day. I'll talk to you soon.